Before we get into today's video, some regulatory compliance. My name is Andrew Alexander. I am Head of Investments for 3 Counties, an independent financial advisor based in County Durham, England. This video is for anyone who has an interest in investing and investment markets, both retail clients with no experience of investing through to industry professionals who invest for themselves and their clients. As independent financial advisors and wealth managers, there is no commercial relationship between ourselves and today's guest. The purpose of this video is educational, and in no way should any of the content be construed as advice, nor is it an enticement to invest. Past performance is not a guide to future performance, nor a reliable indicator of future results or performance. The value of investments may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested. And now, onto the video. Welcome everyone to another of our weekly investment manager videos, and many thanks once again for tuning in. When you think of a global pandemic, I'm sure the first reaction is not let's go out and spend a load of money on luxury brands. But despite this, there's been a huge increase in some of the share prices for a lot of the great names that we see in the luxury brand sphere. So why is this? Can it continue? And should you be having a serious think about upscaling your portfolio to take advantage of this? Well, who better to talk to than the doyen of luxury brands, Swetha Ramachandran, member of the Global Growth Equity team at GAM. But first, as ever, before we get into content, it would be wonderful if you haven't subscribed already to press that little red button below. It really does help us in continuing to deliver all of the investment and financial content that we do on a weekly basis. So, begging out of the way, once again, Swetha, it's wonderful to speak to you. When we talk about luxury brands in an investment sense, what does that investable universe look like?
Thank you so much for having me on. So that's a really interesting question, because I think sometimes there's a misperception of luxury as being just your classic, Louis Vuitton handbag or Rolex watch or something that's very obviously and overtly branded. And in fact, the luxury industry overall is $1 trillion industry, of which really only a quarter is made up of personal luxury goods, which is these iconic fashion and leather brands, as well as what we call hard luxury, which is watches and jewelry. Mm-hmm. There's an equally, if not larger, chunk made up of by luxury autos, cruises, hospitality, wines and spirits, fine art. So really, it's quite a wide area encompassing all various types of activities that consumers engage in that luxury and premium brand segment.
So instant diversification straight away. As I mentioned in the intro, many would assume that the pandemic has not provided the best backdrop. Has that been the case?
So it's very true that in the first and the second quarter of 2020, when we first saw the crisis hit, first in China, which is of course, a key market for the luxury industry, and then in the West, there was a very sharp sort of retreat in consumer confidence, and as a result, people were in somewhat of a state of paralysis. So as we got used to lockdown and working from home, actually what emerged was that consumers were saving more. Household savings were actually going through the roof in many parts of the world. And people really kind of started to embrace a trading up mentality, which is buy less, but buy better. And we saw this through a lot of different categories. So for instance, people were buying more premium brands of spirits at the supermarket because you could get more bang for your buck than, say, buying an overpriced cocktail at a bar. People were buying premium skincare as they were adopting new rituals because of the greater time that they were spending at home. And similarly, I think the idea that people have these bucket lists, which is things that they aspire to at one time in the future, that one time became now, as people's view of the future maybe became much more compressed. These are brands. The brands in the sector that I cover are brands with very long heritage, provenance, authenticity. They command a lot of consumer trust and respect, which is why they were the brands that consumers flocked to as the appetite to consume recovered sometime towards the summer of last year, and has been continuing ever since.
That to me sounds like there's a bit of an ESG angle in maybe buying items of certainly clothing that aren't necessarily disposable. Would that be something that you see within this sector?
There's a really quite chilling statistic from a UK-based charity that suggests that an average fast fashion item is worn 7 times before it's discarded.
Wow.
Now, that's clearly very unsustainable, and no one is doing that with an item that they've actually invested in, such as, say, a Louis Vuitton handbag, which obviously you get a lot more wear out of, or perhaps an expensive watch. So there's definitely a trend where consumers, having spent so many months at home, clearing out their closets, have perhaps realized that the emphasis going forward has to be on sustainable consumption, and that luxury can play into that because it's about buying well-made pieces that have craftsmanship and heritage that can last much longer than your average fast fashion item.
So now we are moving into a post-COVID world. I don't know if I can call it post-COVID, or the end of the beginning, or the beginning of the end. Who knows? Normality. Let's just call it normality. What are the prospects for the sector moving forward for investors?
So we're still in a very ebullient macro backdrop in terms of household savings, which are really the key incremental driver of consumption. We have elevated savings rates in many of the key economies around the world, and that is helping support consumption going into the year end. I would expect very solid holiday trading for many of these companies as families are able to unite once again in a way that they weren't able to last Christmas. So we should see higher than normal levels of gift giving and celebration, perhaps, with wines and spirits, such categories particularly benefiting from that. Beyond that, I do think younger generations have really seriously cottoned on to sustainability in terms of their consumption behavior. And with that generation in particular, luxury resonates quite strongly because of its credentials in really embracing more sustainable practices. And beyond this, I think there are so many exciting developments like virtual and digital fashion that are coming into play, where it's estimated that perhaps in the next decade, 10% of our wardrobe could be entirely digital because of the time that all of us are spending on Zoom or on virtual metaverses. So I think there are a lot of developments that make this sector quite exciting in terms of growth, not to mention, of course, the key plank, which is this growth in emerging middle-class consumption driven by the Chinese consumer, which remains, again, a critical motor of the sector.
Absolutely. I think from my perspective, it's really interesting to see how the theme is developing. Just touching on the kind of digital metaverse that you're talking about with the advent of NFTs and digital homes and digital shoes. It's is this the start of something huge? I think it possibly could be. Swetha, as ever, it's been absolutely wonderful to talk to you today. Thank you so much for your time once again. You stay safe, and I'm sure we'll catch up soon.
Thank you for having me. It's been a pleasure.